Global Development. I'm Nancy Lee, a visiting fellow here. I'm really delighted that so many of you have decided to participate in this conversation. Is my mic working? All I've said so far is I'm really delighted, so. Is it working now? Good. Okay, well, anyway, I was saying that I'm really delighted that so many of you have joined this conversation, and I'm delighted to be on this dais with this exceptional and prominent panel. Exceptional in both breadth and depth, but you'll hear more about that when I introduce them a little bit later. You might say that we are gathered here today to discuss a topic whose time has finally arrived. And the topic being the power and importance of women entrepreneurs. And in fact, in the US context, I have seen people refer to this as the golden age for women entrepreneurs. I think that's a little bit premature in the global context, but I wanted to start with some optimism. And in fact, the recent evidence is actually quite encouraging. The data on the global gender gap, that is the gap between the share of men who are entrepreneurs and women who are entrepreneurs, show a narrowing gap. Between 2011 and 2016, according to data from the Global Entrepreneurship Monitor, average women's entrepreneurship rates rose 13%, while men's rates rose by 5%, so showing a narrowing gap. And we're learning that some of the assumptions that a lot of people held about women's attitudes toward entrepreneurship are actually not particularly well-founded. GEMS surveys show that women are as likely as men to recognize the business opportunities around them, so they're starting businesses for opportunity reasons, not just survival reasons. Women's fear of failure, a topic that's often raised in this context, in Africa and most of Asia is actually equal to or less than that of men. Women in nearly half the economies surveyed believe they are innovators. They are providing innovative goods and services. So that's the good side. But lest you take too much comfort from this progress, let's remember that the gender gap remains a global phenomenon for both rich and poor countries. This is not a developing country issue. It is a global issue. There are only about 10 countries in the world where entrepreneurship rates are about equal. On average, globally, male entrepreneurship remains 45% higher than women's entrepreneurship. More than 2/3 of women entrepreneurs operate in the consumer sector. Barriers to entry are low, but the competition is fierce. Women's businesses tend to be smaller and often are in the informal sector. Women are underserved in access to finance, both loans and startup capital. Women's assessment of their own capabilities is actually significantly lower than men, and in most economies, women are focused on the domestic market, not on international market opportunities. So what that tells me is that the evidence is pointing to a major scope for growth benefits if we can help women entrepreneurs effectively and we can help them out of low productivity traps or ghettos. So it's no mystery in a world where a lot of countries are struggling with growth rates that are disappointing and too low to reduce poverty, that the G20 in its recent summit, the international financial institutions, the World Economic Forum, and many others are focusing on unlocking the potential of women entrepreneurs. So today we want to talk specifically about what really helps women start and grow their businesses. We're focused on businesses with growth and job creation potential as the most impactful for increasing growth rates in economies where women are not yet playing the role that they can play in starting and growing businesses. So hopefully we're going to try to cover a number of topics. Who are these women who start and grow businesses? What are their major constraints? What kinds of interventions are most useful to them? And how can the public sector build partnerships with the private sector to unlock this potential? That's a lot, so we should jump into it very quickly. We are going to preserve time at the end of this conversation for questions from the audience. So please be thinking about what you'd like to ask. I'm going to introduce our panelists now very briefly because you have their bios. We have Karen Groen, furthest from to my right, the Senior Director for Gender at the World Bank. She was the economist and co-director of the Program on Gender Analysis in Economics at AU. She also led the UNU wider program on aid effectiveness and gender equality. She was at USID, Bard College, ICRW. I won't go through all the details. Karen Matheson is acting executive director at the World Bank, where she leads on gender issues. Karen has had a long and very distinguished career at the U.S. Treasury Department. I can personally attest to that, having worked with Karen on many occasions. As among the many positions she held were acting Deputy Assistant Secretary for Debt and Development Policy and Director of the Office of Multilateral Development Banks. Rebecca Ruth is the Vice President of Programs at the Global Banking Alliance for Women, a powerful network of banks interested in increasing women's wealth. She's head of knowledge programs for GBA, and she has over 15 years of experience in international finance, having worked for Women's World Banking, which is the world's largest network of microfinance institutions. And finally, Elizabeth Vasquez is the president, CEO, and co-founder of WeConnect, another very innovative organization which empowers women business owners to succeed in global markets. The WeConnect International Network supports and promotes women-owned businesses based in 100 countries. She's a member of the UN Secretary General's high-level panel on women's economic empowerment, and she's a world leader in global supplier diversity and inclusion. So I think we have the right people for this discussion. So what I thought I would do is ask sort of a set of questions to each of the panelists to give them an opportunity to provide us with an overview on their piece of the puzzle, maybe ask a few follow-up questions, and then move to what you'd like to talk about. And let me start with Karen Groen. You've obviously been a leader in gender research, and you were key in shaping the G20 Women's Entrepreneurship Facility, the WEFI. So just if you could give us an overview of the evidence on who these growth-oriented women entrepreneurs are, what kinds of interventions actually help them, what works, what doesn't, what don't we know, and what we have to fill in over time. And then give us a little bit of an overview on WeFi. It takes a kind of path-breaking, holistic approach, and explain to us why and what's the thinking behind it.
Great. Well, first of all, I want to say that I'm really delighted to be here with some of the women who I consider to be the foremost trailblazers working on this agenda. So it's great to be with them, and we work with all of you really closely. You've asked me some big questions, so let me start maybe with an overview of what we know and the evidence that was important in convincing the board of the World Bank, and I think convincing the G20, the members of the G20 and others who have contributed to this new Women Enterprise Finance Initiative. Let me start by saying that I think the picture's mixed, and actually start with the caveat. There's a lot we don't know because female-owned firms are really diverse, and a lot of the evidence that's out there does not always distinguish between firms that are micro and small. And it's great that we have sources of data like the Gender Entrepreneurship Monitor, the GEM, that does distinguish between growth-oriented versus necessity-oriented businesses, but many data sources do not do that. The growth-oriented firms do tend, that said, to be often more formal or on a path to formalization, so I think it's important to keep that in mind. Not always, because there's lots of diversity in, I don't like these categorizations of formal, informal, because it really is quite a continuum. And I have to say, how do you identify growth-oriented firms is not just a problem for women, it's a problem for SMEs more generally. If you read the literature and you read the Harvard Business Review work on gazelles, for instance, it's really, really tough. Also, in some of the impact evaluations and pilots that we did when I was at AID and now at the bank, the issue of targeting, if you're a bank or if you're a financial institution, trying to target and see who's growth-oriented has some challenges. So those are some caveats, but let me say a few things about what we do know. So this comes from the enterprise statistics data that the World Bank Group collects, which is on formal firms. And we know that formal women-owned enterprises represent about 30% of formal registered businesses worldwide, so only about a third. We know a fair bit about constraints, and I should also just say I should humble myself because we have Myra Buvinich sitting in the audience who's also worked on this, and I have my colleague Marcus Goldstein and Mary Hallward-Dreibmeyer who are more engaged with the data at this point than I am. But here's some things drawing on their work and others of what we do know. IFC has estimated that and others, we know that there's a lot of constraints. They're multiple. They're not only single focus. So of course, everybody talks about access to finance, and that is a key constraint. And the IFC has estimated, this was a few years ago, so we probably need to update this, that there's a $300 billion credit deficit for formal women-owned SMEs. So I'm talking only now about SMEs. I'm not talking about the micro. Now in South Asia and Sub-Saharan Africa, middle-sized firms, and there's different ways you can distinguish size classes on an asset basis or on an employment basis, or sometimes banks and institutions do it on a lending size basis. But in Sub-Saharan Africa and South Asia, middle-sized firms with one or more women owners are more likely to lack access to financial services. Of course, there's a lot of difference, though, between the small firms. There's no differences in access to financial services between male and female-owned enterprises of all sizes in East Asia, Central Asia, and Eastern Europe. So that's a really interesting finding, and we need to use that. There's differences in the type of capital that women and men-owned SMEs need. I think women are hampered by a lack of equity as opposed to debt. So this is something when we think about multidimensional approaches, we need to keep in mind equity investments, particularly for early stage entrepreneurship. Lack of equity capital does limit the ability of companies, SMEs, to grow. And equity capital, particularly in emerging markets, can be scarce, but it's important. So we have a role to play there. Now, I focus on the SMEs, and because you asked me about growth-oriented. SMEs, I think, are it's not that micro don't do this, but SMEs are really important because they have a job-creating function in all economies around the world, and that's why we want to focus on them. So I think it's the job-creating function in particular. There's more that we need to know about women and male-owned firms in the job creation abilities going forward. On the financing side, there's some other constraints, and this comes from experience as well as data that we've collected. Financial institutions, and this is something that maybe I'm looking at Rebecca and I'm saying Inez. Rebecca will speak about, perceive women to be riskier clients, higher cost clients, and lower return clients, which negatively influences what they do with this market segment. And that is regardless of the facts, experience, or other things. So we did an analysis of 2,000 plus firms that receive SME loans from 34 of our IFC clients in 23 countries. And we found that all of the SME clients were very well performing, but they were completely overlooked. So financial institutions are more likely to lend to the clients that they know well. So I think this is something when we think about approaches, we have to also think about what we do with financial institutions, which I know you will think about, you'll talk about a little bit more. Of course, there's other constraints in addition to financing. For instance, economic sector, occupational sex segregation, lack of networks and links to high-value markets, which I think Elizabeth will speak more about. So I want to say a few words about occupational segregation. As Nancy mentioned, women-owned SMEs tend to be concentrated in sectors that are actually overall low profitability or low growth sectors. And I think that's important. So as you said, it's retail, it's beauty, it's food service, it's other services. They're rarely in mining, construction, electronics, and software. So in Africa and Asia, about 75% of female entrepreneurs are in these consumer-oriented sectors versus only about 45% of male SMEs. And and the occupational segregation, when you look at the econometric studies, explains a lot of the gender earnings gap. So the gap in profitability or earnings for female-owned firms. So we've started to do work, and I'll come back to this in a minute, on how we help women cross over into these male-oriented sectors. The social connection issue is really important. Men have more social connections, particularly in the finance and the market space, than do women. That can help them access information and contacts. So women can be disadvantaged by lack of networks and lack of information. And of course, on there are legal and policy barriers. We have a wonderful tool, which I'm sure most of you know, called Women, Business, and the Law, which documents legal economic discrimination in the job market and entrepreneurship. Running a business actually requires the legal ability to perform a lot of different functions. But married women cannot perform the following functions in the same way as married men in many economies. So there are 17 economies where married women are not permitted to travel outside the home without their husband's permission or without a guardian. In 10 countries, women are not allowed to have a national ID. If you don't have an ID card, how can you actually go to a bank to borrow? So having identity, that's actually a precondition, so it's something we need to think about for our toolkit. In 2 economies, married women are not allowed to sign contracts on their own. In 2 countries, they're not allowed to open bank accounts on their own. And in 4 countries, they're not allowed to open businesses, register businesses. So, and of course, I'm not going to talk about the inheritance and family law. So what, in this context of constraints, do we know about what works? And I want to say a few things touching on some of the constraints. We have a wonderful tool in the bank group called Gender Innovation Labs. They started in Africa, but we now do, and their function is to do gold standard random control impact evaluation on what works and what doesn't to reduce constraints to wage employment, to entrepreneurship, transitions to work, and so forth. We have over 15 impact evaluations on what works in the area of female entrepreneurship, largely from sub-Saharan Africa, although we're doing more now in South Asia and Latin America. So let me give you some examples of some of the findings, some of the kinds of things we've done, and then I'll come to the WIFI. So on training, a lot of businesses, banks, others think that, I'm going to start with the training and then I'll come to the access to capital in a minute, that it's a matter of skills, that women have skills deficits compared to men. And they offer standard business training, MBA type course, all kinds of courses. And when you look at the donor dollars that have gone into this, it's really astounding. It's astounding because of the limited returns. So standard business training does not work as well for women as it does for men. And we know a lot about the way training related to entrepreneurial skills needs to be delivered. So one thing we've learned, and we're embedding now in our work at the IFC and at the bank, is what we call personal initiative skills development. So promoting self-starting, future-oriented, persistent behaviors, these are the traits of high-growth entrepreneurs, is really important as part of a training program. It's not just doing the accounting or setting up the inventory and so forth. So we have a Togo entrepreneurship training program that we did an impact evaluation on, and there were higher impacts. It was offered to both men and women-owned firms. The impacts were higher for women on the profits of women-owned firms. So impacts of 40% on profits of women-owned businesses and large effects on innovation and investment. So what we've learned from the way of delivering this personal initiative training in Togo is now being replicated in Ethiopia, Mexico, Mauritania, Mozambique, and I see Lauren here. We're doing an IDB program in Jamaica that is taking this approach. We've also learned that we can do some bundled interventions, which are important. So in Malawi, we piloted a business formalization and business savings program for women entrepreneurs. Combining formalization with linkages to private banks in Malawi led to huge impacts on women's access to business bank accounts and to buying insurance. And I think insurance is another type of financial service beyond debt and equity that we really need to think about for, particularly as assets grow. Having insurance for higher value assets is really, really important. And the insurance industry is only now starting to think about women as a market segment. In Ethiopia and Uganda, we've done some pioneering work to help female entrepreneurs cross over into male-dominated sectors. And we found that when women do take up these opportunities, they make 3 times more than if they had opened a beauty salon or had decided to have a small-scale retail business. And some of the typical barriers like education or finance are not what prevent women from crossing over. Instead, information and mentorship, particularly by men, and early exposure to different sectoral occupations is key. So what we've done in Ethiopia and Uganda, we're replicating in Congo and Guinea. I want to mention capital because I think it's really important here. And this is one of the things that is the problem narrowing in. I mentioned equity, but it's also the type and the size of debt capital for these firms. There's a missing middle. Microfinance institutions lend too little, commercial banks, it might be too big, so there's a missing middle in finance. And we started this program in Ethiopia that I want to mention because and the IFC is doing a lot of this and private banks are now too. It's called the WEDEP program. It's the Women's Entrepreneurship Development Program that aims to increase earnings of access of women entrepreneurs through access to loans and business training. The loans are dispersed through microfinance institutions, but they're actually reaching SMEs and not micro, and a mix of public and private providers. And the idea was to increase access to larger individual loans for growth-oriented entrepreneurs, since existing group loans at MFIs capped out very at low amounts. So one of the things that was interesting when WEDUP began, only 1% of the MFIs that participated consisted of individual loans to women entrepreneurs. 1%. And the average loan size for women entrepreneurs was $1,350. Today, individual loans to women entrepreneurs make up about 18%, and the average WEDUP loan size is 10 times larger. At the minimum, it's $11,000, but they're now making loans of as high as $25,000. This is in Ethiopia, mind you, which is still considered to be a very low-income country. So one of the ways that we've started to identify high-impact growth in entrepreneurs is through the use of psychometrics. So this is an alternative to immovable property collateral constraints for women. In Ethiopia and in many countries, women don't own land or housing that they can use to borrow against particularly to guarantee larger size loans. Psychometrics is a tool for loan officers. It's a battery of tests to be able to evaluate who will be a reliable payer, who's got this persistence, this drive, et cetera. And loan officers were very skeptical at the beginning. They thought this was very, very risky. But we did a random control pilot and impact evaluation, and the results were really fabulous. Now, the IDB is doing some psychometric testing and has some equally good results. So maybe, Lauren, you'll mention that in the conversation. And we're now replicating this approach in a number of other markets. So I think this is also one way of identifying this market. I'm not going to have time to talk about this, but we have Heather Kipnis in the audience, my colleague from the IFC, and she's our guru with how you get banks to change their own behavior. And I just want to mention that we're doing some interesting work with the Bank of Palestine and Habib Bank in Pakistan and the BLC in Lebanon with getting banks to become the employer of choice, which is a way to draw in women customers. So changing the way loan officers approach, market, treat potential women customers is important, and maybe Rebecca, you can say a word about that. So on to
I'm going to interject, Karen. So why don't you go relatively brief on WeFi, and then Karen Matheson can take up more.
Perfect. So I was just going to get there. So we know, as I said, the constraints are multiple, so solutions need to be bundled or multiple. And that was also the basis for this new Women Enterprise Finance Initiative. It's an initiative that has currently mobilized more than $325 million in grant finance, with the specific objective of enabling more than $800 million in finance from the commercial private sector to enable more than $1 billion in finance for female-owned SMEs. We're in the process of formalizing, putting together this facility. There are 13 countries that have contributed to it. It was actually interesting set of back conversations. Idea was initially suggested by Canada to the U.S. It was pitched to the German government, and it was announced and launched in the context by Germany, with the blessing of Germany, at the G20 summit in Hamburg last July. The idea here is to target multiple constraints for women entrepreneurs through a public sector window and a private sector window. The facility will be open to all of the multilateral development banks: Inter-American Development Bank, World Bank Group, European Bank for Reconstruction and Development, Islamic Bank, Africa Bank, Asian Bank. They will be
IDB.
I didn't say Asia? Yeah.
IDB.
IDB. Yeah, Inter-American. So all of the MDBs that are accredited are eligible to apply for this grant finance. They will be expected in their proposals to show how they're going to meet this leverage requirement, because we have to bring in additional finance. They will be expected to demonstrate how they will use the evidence and what's known about what works, the kinds of things I just discussed in their proposals. The facility has a governing committee that will make allocation decisions. This is a committee that is composed of the founding donors who have provided the grant finance. Their first meeting will be in October during the World Bank annual meetings. And it's expected that this finance facility will become operational in October. A call for proposals will be released to the MDBs, and the governing committee will meet and make decisions about allocation of the first call for proposals probably in January of next year. So that's the bare bones.
That's it. Okay, that was an extremely helpful and comprehensive overview. A very good start to the conversation. And now we flow directly to Karen Matheson, who was organizing this whole thing from the shareholder and the donor side. And so I think it'd be interesting for us to hear about what was motivating the donors and the shareholders, what they really want out of the multilateral development banks as donors are providing grant and other financing for these kinds of facilities. Why did the G20 decide to make it this one of their big deliverables? And just give us a little bit more of the backstory. Which countries led this whole thing? I think it'd be interesting to the audience.
So as Karen said, there had been this bilateral meeting between Canada and the U.S. some time ago, and a decision to do something on entrepreneurship, but it didn't really have any particular form. And then Gina Powell, who set up something called the 10,000.
No, it's the Women's Entrepreneurship Opportunity Facility that's at the IFC, but it's with Goldman Sachs,
and so
known as 10,000 Women.
10,000 Women. And so since IFC is an implementing partner, I think she had the idea that the World Bank would be a good vehicle for something, and raised that with President Kim. And at the same time, Angela Merkel, who is a tremendously strong supporter of this agenda, saw an opportunity for the G20, and so it was a sort of nice confluence of factors at the top. Tremendous leadership out of the World Bank. I cannot overstate this. It's really rare to see an initiative come together in this short a time frame with this much sort of thought behind it. It really was quite remarkable that we moved from concept to approval between April and July, and I've never seen anything move that fast at the bank. So, so that was really had a lot to do with it. In terms of the donors and what they were interested in and what they're it was also interesting to me to see how easy it was to bring shareholders around. And I think there are a couple of reasons for this. One is I think there was a recognition that there's a gap, and it was very well articulated, again, by a number of really impressive women. Christine Lagarde and Angela Merkel, for example, both spoke so eloquently about the gaps in access to finance, and also simply the absence of a good instrument to help deal with them. There is, as Karen mentioned, this Women's Economic Entrepreneurship Facility at the bank, but that's a debt instrument. So, and it works through the FIs, but they're really financial institutions, works through the financial institutions. But so it's just focused on the debt side, but we don't have anything on the equity side. We don't have anything on the insurance side. We don't have anything on the business case, making the business case, which I think is really important. We don't have a lot of information about what happens, about the nature of the businesses. I mean, Nancy's indicated we're getting some more and more anecdotal information, but just having a little bit more about, are these enterprises growing? Are they really women-owned or women-led? Do they hire other women? And then, importantly, what happens after a facility is exhausted? Do these institutions continue to reach out to women to serve them as customers? So they're just a lot of information and a lot of scope. So I think there was really a sense of this is not a duplicative facility. This is something truly additional, and it was. I have to say, it was not difficult to garner a lot of support from a lot of the key shareholders. So, and then just in terms of the, as Karen said, we're at the very final stages of putting together the governance document, which again is remarkably fast. And I think there's a pretty remarkable convergence as well of objectives. So, one is that this be something that a number of institutions can apply for. And, we're looking for a number of things that we have a score sheet that we will rate the different proposals on, looking at issues like leverage, as Karen mentioned, also at targeting poorer countries, which is a headache for these guys, because we're saying we really want you to leverage, but we really want you to go into hard environments, and those don't necessarily come together. But those are a couple of examples. Looking for, again, the learning proposals that come along with impact evaluations will, I think, be weighted. We'll certainly weight that heavily. So we're pretty close to final on what the documentation will look like, and then, as Karen said, get the call for proposals out. And then I just want to mention that when we actually review the proposals, there will be also technical experts that the bank will be drawing from, because we as the donors, for the most part, are not technical experts in this area. So I think that will really contribute to the integrity and effectiveness of the WeFi, and that there will be a team of men and women who really know the subject matter and can really help the rest of us determine how to best allocate the funds.
Excellent. That's very helpful. All right, I think we should go now to market access, and then end with access to finance. So tell us a little bit about WeConnect. It's this innovative organization. Its memberships is large corporations that are interested in sourcing from women-owned businesses. Why are these corporations actually interested in sourcing? So from the membership side, what is the driving force in the the companies that want to purchase from small businesses owned by women, and then from the women-owned SME side, what does it do for them? What does that link with large corporation do, and does it actually drive business growth?
So thank you for the opportunity. Really appreciate the work that CGD does and the World Bank and the GBA, and these are all friends and many friends here. And it's an exciting time to be a woman-owned business. It's not just the governments that recognize the power and potential of women as business owners to build assets, to create jobs, to ensure that there's wealth that is distributed in a way that everyone benefits. So that's why governments want this. But as it turns out, there's also good business reasons for the private sector to want this. So corporations, they want to be as profitable as possible. They want to anticipate the needs of their market. You can't do that if half the population are represented by women, but all of your suppliers are men. So in the case of the corporations we work with, they're some of the largest, most inclusive corporations in the world. They spend over $1 trillion on products and services every year, and they spend about 1% of that with women-owned businesses. And that's just really, really bad business. Because if you don't engage all of your end users, your customers, in developing your products and your services and building your business, you're probably not as profitable as you could be. Probably not giving your shareholders as much of a return as they would like. So the corporations have a vested interest in making sure that they have access to the world's best suppliers, all of them, whoever they are. And it's not just women, right? It's all the suppliers they currently use, but also the underutilized suppliers of the world. It might be LGBT, people with disabilities, ethnically diverse businesses, ones that typically aren't applying for their business. And that's what we're finding. Generally speaking, the underutilized communities, in my experience and what I've seen firsthand working with women business owners now in 100 countries, is that these large organizations are generally not trying to purposely keep women out or other groups out. Generally speaking, those groups don't even try to win their business. It doesn't occur to most of the women we meet to knock on the door of a Walmart or an ExxonMobil or a Marriott or an IBM or an Ernst & Young. And so we've got to shift this. We've got to change the dynamic of women assuming that I'm going to go into a low cost to entry, but unfortunately often low profit potential sector because it's comfortable for me and I'm going to manage my risk. And so it's not that women are risk averse, they just manage their risk differently. And of course, it's hard to imagine having an engineering company if you've never seen a woman who looks like you have an engineering company. It just doesn't occur to them, generally speaking. And so this is an opportunity to find the women in businesses that are in these growth sectors and to do a better job of telling their story. How did they do that? What challenges did they face? How did they become so successful in winning business with larger organizations? Because I can guarantee you that the women business owners who are able to successfully develop clients, customers, banks will chase them. Investors will chase them. But if you don't have clients, you don't have a business. And I don't care if you're a for-profit or if you're a social enterprise or if you're a nonprofit, you have to have someone paying the bills. Otherwise, you can't deliver your mission. You can't make sure, and this is why entrepreneurs wake up in the morning. They want to sell their stuff. And so we have to make it possible for everyone who has these dreams to at least have an equal opportunity to realize those dreams. Because we actually desperately need, men and women, boys and girls, we need the solutions that women see. Every day we're out there, we know what's wrong with water systems, educational systems, infrastructure systems, chemicals. We know firsthand access to fuel and energy sources. We know how hard those things are. And I think the women I talk with have really good innovative ideas, but if you don't have assets in the first place, in an asset-based lending environment, it's really hard to get what you need to start and grow. So we're trying to change that. And we're fortunate because we're starting with the demand side. We're starting with the market, a huge market that buys everything. So if you just think about Marriott, they buy everything in this room, And the paper and the carpet and the lighting and the PowerPoints and the catering that's outside and the building of this and the cleaning of this building, all of the corporations we work with buy all of those things. We have to get women to start thinking about their potential of owning these organizations, running these organizations, but it also being a part of those supply chains. It could be local value chains, regional value chains, global value chains. But I was just in South Africa last week, and I was talking with women business owners and corporate buyers in Pretoria and Joburg and Cape Town and Soweto. It doesn't matter where you go. Women-owned businesses that want to grow their businesses, not everyone does, but the ones that want to grow their businesses, they just want an equal opportunity. But they don't know the buyers, and they don't know what it is the market is buying. And so it's a huge global economy. South Africa is having real challenging economic times right now, but there's a lot of money nonetheless. But if you don't know what it is the world is paying for, then it's really, really hard to deliver solutions. So I'm encouraged by the WeFi Fund. I think there's huge potential because it's not just focused on access to finance. We did a training last week with ABSA, which is one of our members with Barclays. And the trainer asked the women business owners in the room, what is it you need most? And some of them, hesitantly because they were in a bank, finance or loans. He's like, no, you have to have customers. You have to sell your stuff. That's the most important thing. Is you got to grow your business through sales. And if you grow your business through sales, we'll fund you. We'll give you loans. But guess what? If you don't have sales, good luck getting a loan, right? So it's really basic. And sometimes I think we make things really, really complicated. But we have to think about just the basics. How do you grow a business? Well, you get customers. And then you can start hiring people as that customer base grows. So I'm thrilled that all these things are being tied together and that so many of you are understanding all these connections along the value chain. And again, it's a good time to be a woman-owned business. So thanks.
Which you personally know as a head of a business. All right, so this works very well. We can now segue to actually what banks think about all of this. Are you finding in your membership, the Global Banking Alliance has a membership of banks interested in serving women. Are you finding your membership growing? Are banks putting the women's market at the center or as a very important of their business strategies? And are some reasons growing faster than others? And then just say a word about what kind of customers that banks perceive women to be.
Sure, so thank you also for the invitation. Very excited to be here. So just to perhaps step back a little bit, as Nancy said, we're a global consortium of financial institutions, and all our banks have programs that target women specifically. The majority of our banks actually have a specific focus on SME, so about 90% focus on SME. And just to go back to some of that segmentation, because I think it's quite important, the way financial institutions look at businesses, they have a retail portfolio, as I'm sure many of you know, where we have the consumer business, and then they have a business portfolio where they will segment by micro, small, medium, large, corporate. So that's how they would look at the businesses. Within the business, however, they will look at the life cycle of the business, right? So startup, early stage, growing, and then mature. And so looking at and tapping in, following up on what Karen was saying, we see a lot of challenges, a lot of need for the startup and going into the growing, and certainly that missing middle that's between the micro and the small. And the majority of women, as Nancy was saying, tend to be there. So we do see a lot of trends, and we do see this golden age that you're talking about in terms of the banking community. And I think that has been driven by a number of factors. First of all, the research. There's a growing research the last 10, 15 years. Everyone from BCG to Goldman Sachs really talking about the business opportunity, the female economy, and really the women's market as an actual market, not as women as victims, not women as supporters, but women as a potential and a strong business opportunity. So I think some of the figures from the IFC, for example, $300 billion credit gap, that really helps in making a case for why this is a good business opportunity. Certainly, we've seen a really strong push from the international development community. The IFC, and the Goldman Sachs fund, certainly now the WeFi, the ADB, Lauren is here as well, Women Entrepreneurship Banking, which of course Nancy was a big supporter. And we see other players coming in, the EBRD, FMO, and other development banks that are very much focused on this. And that has really helped in bringing a lot of the banking community into this. Then we see really strong performance from a few key players that have led the way in this. And so, for example, Westpac Australia was our founding member. In the year 2000, they founded the GBA along 3 other commercial banks. So seeing this commercial approach, seeing that it actually works, that it is a commercial business practice that banks can implement, I think has driven this golden age. Then we do see in the US and the EU a big push for internal diversity. That has helped within the banks, the recognition that gender is an issue. So obviously internally is very important, but I think that helps a lot of the bankers to understand that there's a market opportunity and that things need to be looked externally as well. On the regulator side, we see also, Christine Lagarde and the IMF doing a big push on women in general. And AFI, the Alliance for Financial Inclusion, has also begun to look at this issue in the last few years, both from obviously a financial inclusion aspect, but also definitely looking at SMEs. And finally, I think basic economics, banks are looking at ways to compete. There's a lot of challenges right now in terms of disruption in the sector, and certainly banks need to be customer-centric, and this is what we're talking about. So there's this massive opportunity, but the GBA has 45 member banks. You'd think there'd be hundreds and hundreds. And so just looking even within the GBA, we do a survey every year called the Economics of Banking on Women. Our banks currently hold 35% of their customer base are women, 90% of their loan portfolios, and 24% deposits. Those are the converts. Those are the banks that really want to target this market. So we have a long way to go, as you can see. So a few years ago, we conducted a research report with McKinsey, and we interviewed 30 commercial banks that represent 20% of global revenues. And what did they tell us? First of all, is an issue of awareness. They're not aware of the market opportunity. Now, I think that's definitely changing because of the WeFi, because of, We Connect, because of all of us really bringing that out. But then there's also a lack of understanding of why there are differences between financial behaviors between men and women and just how big or profitable this market is. And here, one of the main reasons we find why is this case, and thinking about how do bankers think, bankers need data. And we see a big issue of data. Bankers are lacking demand-side data, so really understanding the differences in behaviors between men and women, but also in supply-side data. And really understanding the portfolio, how can they benchmark their performance with other banks? How can they size the market? How could they actually make the business case? And so we do have a partnership actually with Data2X, and Myra Buinich is in the room, called the Women's Financial Inclusion Data Partnership, where we're really trying to tackle some of these issues. And the World Bank, the IFC, the ADB, AFI, IMF are in this partnership. We really hope to solve some of these data issues. Now, in terms of your second question on how do banks perceive women, I think it's a challenging question. I think in general, banks tend to think of themselves as gender neutral. So when you do a credit assessment, you don't consider gender because that's considered discrimination. And you shouldn't, because you do a risk assessment based on a variety of things. But what we found actually is that actually goes against being a customer-centric bank, because women need different things from a bank. So for example, we find that women need more information. When they're trying to make a decision, they take time. And again, I'm generalizing here, but obviously there's grays in everything. And so one of our members, Westpac in Australia, did mystery shopping in one of their branches, and they found that she was asking for a loan. The loan officer asked for more information and then didn't make up her mind, so she left. He thought she wasn't interested, so never called her back, when in fact she was super interested. She just needed to go back home, think about it, and then make a decision. So it's a shift in mindset of how women customers what their financial behaviors are. And I think that's something that still needs to work on. Financial literacy, for example, I think Karen was also mentioning on that. Women tend to, in some cases, be less financial literate, so they need sort of that support. They need additional financial education. In other cases, they self-report less confidence. So they may actually know it, they just think that they don't. And so having a financial advisor that is supportive, that is helping women think through this is very important. For example, Westpac again found that 50% of women business owners did not know how to make cash flow projections. So knowing that is very important for a bank, because if you don't have your cash flow projections, you will never get a loan. So providing these kinds of services, and I'll stop at that, but I can talk a little bit more later on at some of the interventions. Providing these kind of services is not just about the capital, it's also these kinds of non-financial services that are gonna help women really be bankable.
Thanks, that's another great overview. So we basically have covered the entrepreneurs themselves, the services they need, what works and doesn't work, what's motivating the international community, how to look at it from the market access side, and how banks look at it from the financial services side. So pretty good overview. And so now I'd like to turn to all of you in the audience to ask questions on any aspect of this. We have a half an hour. I wanted to preserve a lot of time because we have a big audience, and I'm sure you have questions. So we have people who are walking around with microphones. So I'll tell you what I'll do. I'll take maybe 3 questions and then hand it over to the panelists and continue from there. This lady in the second row.
Good morning, ladies and gentlemen. My name is Rosemary Segero. I'm a president of Segero's International Group. We focus on SMEs and manufacturing here in the US and in Africa. We've talked so many years about women, SME, especially research with the World Bank, United Nations, many, over 15 years. But the women are still in the same condition. The SMEs are still in the same condition. So what do we do from here? Is it education or what is it? There's something more than just getting the money to do the business and get into supply chain, and what are they doing? So where are we coming from here now, and where are we going to see that women from the rural area of Africa, where I come from, Kenya, to the United States, because you cannot compare women in that world country to the women in the US or women in Australia or in Britain. These are different women and doing different things. So how do we deal with this? Is it education or money or what? So that when we come from here, we are having a change of mindset where to get the women and where they'll be successful to get into supply chain and what they do, especially in manufacturing. Women are down there. So what is the problem?
Very good question. Please.
Thank you. A very rich discussion. My name is Krista Ridley. I'm Senior Director for Gender and Humanitarian Programs at the Global Alliance for Clean Cook Stoves. And we strive to create a thriving global market for cook stoves and fuels, so a very market-driven approach. And have worked with women entrepreneurs, women CEOs, have a network of about 50 women entrepreneurs in the sector, and it's historically a sector that's very male-dominated, so very proud of the work we've done. We've provided training and grants and also leveraged funding so that when we train those companies up, they're able to actually leverage and access impact investment funding. And we've also done empowered entrepreneur training, which is an agency-based training. So I was very interested in what Karen had to say about different types of training for women, which focuses on their particular needs. And we found with that training that women actually outsold men 3-to-1 in the cook stoves and fuel sector when we provided that agency-based training, which include leadership and business. But I do have a question. So I was very interested by the mention that women need mentorship, and we also had noticed that with our entrepreneurs. We had a workshop last year in Kenya, and that was kind of the biggest thing that the women were telling us. They had training and other things, but the mentorship was really important. So I was particularly interested in what you said about women needing to be mentored by men, and how, what was the reason for that? What would you be expecting that's different from men if they were to get mentored? And what are some of the strong mentoring programs and lessons learned around mentoring that we could build on?
Very good. Let's take one more. We have a lady in the very back.
Thank you. So this was really great. My name's Deepa Karthikeyan. I represent Athena and Phenomics. We're a development analytics firm. Incidentally, we were part of some of the demand estimations on financing gap that was done by the IFC in India and Bangladesh. That's great. I have a question specifically. I think there was a reference made to psychometric tools to evaluate growth-oriented businesses and a tool that banks can potentially use while thinking about what kinds of businesses to support. I'm really curious to know what sorts of variables you're considering within that, and if this is publicly available for researchers to access and learn more about. Yeah.
Very good. So 3 questions so far. One about why can't we make progress faster, another one about male mentoring, and then a third about the data from psychometric testing, one of my favorite subjects, actually. So anyway, I want to make it so that anybody on the panel, any and all people on the panel can answer whichever questions you're interested in.
On the access to, what are the next steps in getting these women to grow, be able to actually grow these businesses? This is just a pitch, but it's free. The women can self-register for free in our global database at weconnectinternational.org. One of the challenges that we find with the corporations that want to buy from women-owned businesses is they simply don't know where they are. They're like invisible in global value chains. So we all have to work together to make the invisible visible. And it's actually quite urgent, because the longer we wait and we don't make it really easy for buyers to find these women, there continues to be a good reason for why they can't possibly engage them in their value chains. This is true for corporations, it's true for governments, it's true for multilaterals that want to be inclusive in their sourcing practices. It's really hard for everyone to find these women-owned businesses, and yet there's at least 10 million of them out there. So it's really, really important that they get self-registered for free. They'll have networking with other women business owners across 100 countries. There's best practices. We have an academy. So there's free training modules on how to get into global value chains, how to sell, how to pitch, how to ready yourself for doing business with other organizations. But we also certify. So we will verify that it is, in fact, a woman-owned business, which is a huge issue because there's a lot of investment, not enough, but a lot of investment being made in women-owned businesses, and a lot of good intentions. But often we find that we work with organizations that have done a lot of training and access to finance, and they're really women-led businesses, but men actually own the majority of the companies. So I think we have to really think very, very carefully about our intentions. How do we ensure that these investments that are being made will truly benefit women-owned businesses, because there aren't enough of them and we're not growing fast enough. And so those are some easy, simple steps that women can take now on their own initiative, about 10 minutes. There's no cost. And I think we can really transform true opportunity by making it easier for the buyers and sellers to find each other.
Excellent.
Can I just follow up on that? You said something about women in Australia different from women in America and Africa, and I think that's a fair point. And one thing we did not talk about is that there is a public sector window to the WEFI, and that under that, the concept would be to do sort of a constraints analysis, looking at a very specific, whether country, region, ecosystem, to determine what are the particular constraints for the women there, and other public sector reforms that can be undertaken to address those. So that's also something that makes this a particularly unusual facility in that we do have the public and the private. I think another challenge is this question of what we always call, is it scalable? And so I know Karen's going to talk about the psychometric testing, and I think that will be very interesting, because what the Gender Innovation Lab has been doing, is these really fantastic studies to see what works, but they are at a small scale. And so the question is, can you take the conclusions from a study in Togo and then apply them to a Nigeria or a Kenya or even in Latin America? And that is definitely one of the big outstanding questions for us.
I think Rebecca was going to answer, but
Yeah.
let me just interject one thing on this question of sort of regional differences. Just so that people don't think that rich countries are more entrepreneurial, or that women, some of the largest gaps in entrepreneurial activity are in the highest income countries, and the lowest gaps are actually in Africa. So we should not think that this is a problem that, as I was saying before, it's concentrating in low-income countries. This is really a global problem.
No, and I was going to follow up on what Elizabeth was saying as well, in terms of, I think an ecosystem approach is really important, and maybe something that you can consider. In terms of looking at all the players in Kenya and in the ecosystem. For instance, we do trainings for bankers, and we just had one in Zambia. We invited bankers from all over the world. We also invited certain central bankers. The Central Bank of Kenya came. They were very interested in our commercial approach. So reaching out to central banks, then working with NGOs within your own ecosystem. Supplier diversity, of course, is very, very important. Looking at the financial institutions, we work with KCB, for instance, in Kenya. And the banks themselves can then provide access to a lot of the networks that, for example, the women entrepreneurs need, and then can provide and sort of create a space for them so that they can get to know each other, and then they can actually work together to make more change. I do think we are a peer learning model, the GBA is. I agree completely that there's a market, every market is unique, and there's differences in every single market, but there is a lot to say. There's a lot of commonalities as well. So we've had, for example, banks from Western Africa come to Australia and learn a lot, but then they come back and obviously apply it to their own reality. So agree with you completely, but at the same time, we can learn from let's say other markets. Certainly, we've also had bankers from the UK go to Brazil to learn from those markets. So it's north-south as it's south-north.
Do you want to just?
Sure. So let me just touch on the questions about men and then about psychometric testing. On psychometric testing, just quickly starting with that, I'd like to invite Heather and Lauren and Nancy to comment. But it's essentially a battery of tests that a loan officer gives to a prospective borrower that tries to get at personality or temperament kind of traits. So persistence, drive, self-starting behavior, reliability, those kinds of things. And it's done in a way with underlying algorithms that the loan officer actually doesn't know enough to game the system. It's anonymous. Or the client in some ways. And there's been a fair amount, I was in a seminar a few weeks ago, a fair amount of impact evaluation on just this tool. Banks, as Heather and I think Lauren can attest, are increasingly looking at it. There may be something that the public sector needs to do to sweeten the pot to encourage more banks to take up this tool, but it's been all of the impact evaluations I've seen, and then I think also from the IDB, have really shown a lot of positive success. So, but it does involve some training and change in mind shift, I guess, of loan officers in banks to get them to use this. but maybe you guys can add more on that. On the men thing, just I think the issue of men is really important. And the work that we did in Kenya and Uganda is male family members. It could be a father, it could be an uncle, it could be a brother. But what's important, I think, about men is because men are this issue of occupational segregation. Men are in different markets and have different networks and so forth, and have different kinds of information. And I think that's really important in terms of helping women to navigate the crossover and also on the confidence side, which both of you have touched on, giving a boost there. So, I think what we haven't done, I think, and maybe you guys can tell me if I'm wrong, when we think about our training programs, we haven't thought about how you help men become better mentors for women. And I think that's actually something we should be thinking about.
Yeah.
But maybe Heather and Lauren can say a word about
Lauren and
psychometrics.
Heather, do you want to add anything on psychometric testing? Sure.
So I'm Lauren from the IDB group, and we've implemented the Entrepreneurial Finance Lab (EFL) psychometric tool in a variety of countries in the region. We have one impact evaluation, to the best of my knowledge. There may be more, but one is in Peru, and it shows, I think, if I recall correctly, two things. One, that it's a useful tool as a secondary screening for already banked clients, and it also helps unbanked clients who would have been rejected under traditional credit scoring models to be accepted. In all honesty, I don't recall the difference between men and women, but I do know that it's helpful to both of those rejected clients. I would say one critique, or at least a current conversation we're having now with banks, is how to potentially shorten the tool, shorten the actual tool, the survey, the questions, to the clients, so that it becomes a little more user friendly, and talking to the risk departments of banks as well to really educate them on the value of this tool and how it can be incorporated.
And that's complementary to what we've heard from some of our members, Lauren, in that it's not a substitute for the risk assessment, which I think is what we all hoped it was going to be. So I think there's still some sweeteners that would be helpful in seeing how we can transition to that model as a substitute, but it's a complement.
Heather, anything?
I'll just speak really loudly. No, I was just going to comment on what Rebecca said. We have it needs to be complemented with existing tools right now, so it'll be exciting to see as we move forward how that can be positioned potentially as standalone and how it can be scaled. But aside from that, I will pick up on a comment that Karen just mentioned about male mentors. So interestingly enough, we just piloted a program with the Bank of Palestine where we used an innovative approach to involve relationship managers that were males to mentor women SMEs alongside a training program. So it's a blended program. And what's come out of this is, and the results will be published in October, is that we have seen that these women-owned businesses are growing. They've increased employees by 28%, women employees by 31%, and also paid employees by over 100%. So using male mentors. So we didn't necessarily test if they were male or female, and so we can't say it's because they're male, but it's an interesting finding. And Ipsos, Kate Love, who's here, she's the one that conducted the evaluation. So stay tuned for that.
Yeah, just one more thing on psychometric testing I can't resist. So the original point of psychometric, there's sort of 2 points to psychometric testing. One is to cut costs, because you ask a series, I know it's 40 minutes of questions, and it doesn't seem that burdensome to me, but in any event, which is a much lower cost than doing your usual due diligence you have to do to score a client. So one thing is cutting the cost. And the original idea is to compare the outcome of the score you get with psychometric testing with the score you get by conventional means. And that gives the banks confidence that the psychometric testing is reasonable. So that's one thing. But the other thing is, how do you deal with clients who fail your conventional scoring but pass your psychometric testing? And that's where it gets a little tricky. Okay, so we still got time. Let's do 3 more questions. Okay, so we have, we have 2 people right next to each other, so why don't we take the front row? I think we're going to have time for everybody's questions. Please.
Hi, can you hear me?
Yes.
Okay. Glennis Long. I'm with SBA, Small Business Administration, and I met you 20 years ago on my first job. I'm going to retire in 2 weeks, but I just spent 6 years doing the Women-Owned Small Business Program. And so I am very, very interested in everything that you have gone and done. What I would request, it's sort of a question, but it's also a request. You've got such wonderful tools here, and you've mentioned about 6 things, all of which I want to look at. I wish you would consider making one of them the main portal. And I would recommend putting it in the World Bank and having everybody feed into it, because when you say World Bank, everybody's like neutral about that. It doesn't have any. I mean, you may think it has huge political things, but from the real, the ground level people, they say World Bank. That's honorable. That's the way it's looked at. And I just compliment you on what you're focusing on: communication and training. So if you could just kind of bundle it all together and just do what you're doing, but just keep on doing it.
Go ahead.
Excuse me. Mike Ingram with Ernst & Young. I'm curious, when we think of the relative disadvantage of women entrepreneurs in accessing finance, what we know about the degree to which we can attribute the disadvantage to bias that takes place within the loan decisioning process versus systemic biases potentially that have disadvantaged them up to the point that they walk through the bank doors.
Good question.
Okay. This lady right here.
Hello, my name is Dina Dukhan, and I'm with Women for Women International. And thank you very much for this very useful information. Over the years, we reach around 500,000 women, and we target the most vulnerable, conflict-affected women. So reading a little bit about the fund, trying to educate ourselves about it, I saw that you want to also reach vulnerable women. I understand that the focus is SMEs, and it makes sense in this context, but I'm really interested to hear a little bit more about how you're going to be reaching the most vulnerable women, because we do have a bundled approach for women empowerment. We tackle the social empowerment, economic empowerment, and we also have men's engagement programs since 2002. We realized if we don't work with the men in the community, we are not going to get anywhere. And we evaluate our women's ability to save and earn income and access to networks. So what you have been saying is music to our ears, but we are really interested to hear more about what are you doing for vulnerable women, so we make sure we are not leaving anyone behind. Thank
Very
you.
good. Okay, so we're going to try to accommodate the other people who are interested. So if the panel could do like a lightning round and answer those questions, and we'll try to fit some more in.
So just 2 things very quickly. I'm really happy you said the portal. Actually, the World Bank has something called the Gender Data Portal already existing, and there's a link to the WeFi page as part of it. It has a whole bunch of resources, a whole bunch of data. We're part of a partnership actually now with the UN Statistics, and others through Data2X to actually enhance this portal to do exactly what you're suggesting, including perhaps having some stories on it. On the WeFi, this is, there are many other, many programs in the World Bank, among bilaterals, governments, other private foundation donors that really focus on the poorest of the poor. This is not that. This is a complement to those other programs, reaching a different market segment. It's not intended to substitute for those other programs, and in fact, resources are still going into those other programs. But this is a really important focus to get at the growth-oriented female firms that will create jobs and help grow economies. And in that process, hopefully reach poorer, help on the poverty front. But it is not, we have to be really clear, it's not that. But there are many other things. And as you probably know, the consultative group to assist the poorest, CGAP, all of the other micro-enterprise work really focuses on the bottom of the pyramid.
Anyone want to answer the gentleman's question?
I will try, because it's a really good question. So the credit decision technically should be gender blind, and gender should not be a part of that decision. I cannot tell you any studies that I've seen whether that the actual there is actually a bias or a gender bias in that credit decision. And I think any bank that would be doing that could be sued for discrimination. Now, in this country, thank you. Now, there is certainly what we have seen is a lot of unconscious bias in the process of coming up to the door, exactly what you're saying. And again, we call it unconscious bias because it might not, in many cases, it's not something that is really, oh no, I'm not going to give her a loan, or oh no, it's just something that is social norms that are unfortunate. We all have. I've gone through unconscious bias training myself, and I actually found, as I was going through descriptions of girls and boys, that I was actually, it's in all of us to recognize, and certainly it is in bankers as well. And so, some of the work we focus on is certainly providing that unconscious bias and that unconscious bias training and making sure that they're aware of this when they are working with women and women entrepreneurs in particular. So I hope that someone answers your question.
Can I just also, on that, I think Karen started out by describing how different the rules are for women in different places. So if you look at women business in the law, which lays out very nicely all of the rules and regulations that limit women's access to capital, among other things, that can give you a sense. But I do think, again, it's going to be context specific. So in the U.S., at least in theory, you should have a level playing field up until you get in to talk to the loan officer. But one anecdote I heard just this weekend is there was a couple of women Silicon Valley trying to get venture capital for a new startup that was sort of like an Etsy in San Francisco, and they weren't getting anywhere, so they created a third persona, Keith. And Keith managed very quickly to get his bros in the venture capital field to provide funding to this startup. So it does give you a sense. We've heard a lot lately about Silicon Valley, but I think that that speaks to Nancy's point about the gaps are not necessarily smaller here than in those other countries. In fact, they're sizable. So I think that does point to the role of unconscious bias. Or not even, but
his name was Keith Mann.
Keith Mann, that's right. I love that, Keith Mann, yes, exactly.
And then, sorry, the last thing I wanted to mention on that also is across the board, across regions, countries, one consistent thing we find is that women have lower non-performing loans than men across banks, and so if they have lower non-performing loans, you would think that they would be getting more financing because it's cheaper for the bank, right? So there is that kind of like why. But again, going back to your question, I think there is both a demand side and a supply side bias on, for example, the size of the loan.
Right.
She's not asking for a bigger loan. Mm-hmm. He is. Mm-hmm. And she's not getting the bigger loan. He is. So there's a lot of, let's say, intricacies that we're still learning, quite frankly, and we're still looking into. But that's a great question.
And that was one of the sort of revelations of the microfinance industry, which is dominated by women borrowers, that they are actually very good customers, but that revelation has not moved into the SME finance world. And we haven't talked a lot about startup equity, and but the situation, as far as I know, is much worse in terms of the degree to which women are underserved in equity than in loans. Okay, we're going to do 3 more questions. These 3 ladies, but I don't want to ignore. Okay, so this lady over here. All right, we'll take 4 questions. This lady over here, and then there are 3 right in this middle section.
Hello, thank you very much. I work as a consultant on trade and technology at the World Bank. And my question is, how can we ensure that new technologies, especially blockchain and 3D printing, do not replicate the same gender bias? How can we develop them with a more gender-neutral lens so that they really empower women entrepreneurs, especially in the developing world? Thank you.
That's a tough one.
Yeah, that's a tough one.
And okay, and if people could keep their questions short so that we can fit in the answers.
I have an invitation. My name is Pam Baldinger. I'm with USAID. I work in the energy sector, which is traditionally very male-dominated, and we've been working really hard on energy and gender. And next week we're having a meeting where we will present the results of Empowered Entrepreneur Training Program that you heard about before, which we have rolled out now, had about 700 people trained in East Africa and South Asia. Also, we will have the results of a return on investment study done on one of the companies to see if there was a return on investment for them in actually investing in training the entrepreneurs in their supply chain. And it's been very promising, but it's still early. And if you'd like to come, it's next Tuesday. You're all invited. That portion will be in the afternoon. Just come see me afterwards. Give me your card. And also just one comment on gender segregation and mentorship. I also manage a program called Engendering Utilities, which is working with electric power companies, which are often the largest employers in many countries. Very male-dominated, the sector, but also within the company. Women tend to be focused in certain areas. So we're working with them to diversify the workforce, improve gender equity. And one of the top things that kept coming out in our baseline study of 14 utilities was lack of mentors for female staff. So that's one of the things we've been working on, even at the top level.
Yeah, very good. Okay. We have, I think, two more ladies here.
Hi, thanks very much. My name is Janet Fleischman with the CSIS Global Health Policy Center. In all this discussion, which has been very fascinating, we haven't talked about one of the obstacles that women face all over the world, which is access to family planning. And that whole dimension of not only the need for training and mentoring and all these other issues, but access to services, access to information so that they can handle that part of their lives. Could you address how you're incorporating any of that into any of these programs? Thank you.
I have kind of the converse of her question. My name is Catherine Honeyman. I'm the Senior Youth Workforce Specialist at World Learning, and I also own a small business. Many women, or some women, start small businesses during the childbearing years to have more flexibility to participate in family life. And they may not be thinking primarily about growth, but they may have growth potential. So I'd like to hear about how you have worked with women, or how you envision working with women who have that growth potential, but who are initially just lifestyle entrepreneurs.
Okay. All right, we'll do one more. I'm a softie, but that really is it.
Maria Sierra from the Trust for the Americas, and I have a questions related to informality. You mentioned that in the beginning that it's very likely that women's entrepreneurship are informal, and also in Latin America, especially in a project I'm running, we start training program. Actually, we're seeing that lots of the women who come to our program are entrepreneurs, but are in the informal sector. So I wanted to ask you for insights or any inputs that you may have of some things that will help, or what you've seen to push these women towards formality, because there are many barriers towards it. That's it.
Okay, very good. All right.
So I'll take some of the last two, which we do find that bringing the market to women is a really powerful incentive to giving them a good business reason and economic reason to want to move from informal to formal. We also find that a lot of the most successful women business owners who get contracts from the corporations we work with in the first year, doesn't matter if it's a developing country, a least developed country, or a most developed country, women business owners in those countries that have corporate experience, even though they're a startup and they're fairly new, they understand how large organizations source and what their pain points are, and they are particularly good at offering solutions to problems or to challenges. So I do think that it's really important that we expose women entrepreneurs of all sizes, even if they just have an idea, to real market opportunities, whether it's in the energy sector. I'd love to talk with you about what you're doing with the energy companies. We work with a lot of energy companies that want to buy from women-owned businesses because they do source from all over the world, and they are large organizations in their countries. But generally, women are just completely missing, not just as employees, but in their value chains, how they grow that company and how they anticipate the needs of their customers. So there's a lot of opportunity within all of that to give, not just in theory, and not just train them, you actually have to introduce them to buyers and have the buyers tell their story about what do they buy, how do they buy, what do they expect of their suppliers, what are the, not just what we buy today, but what is it we're going to need in the next 3 years so that the women can position themselves to have those correct solutions.
I'll try the blockchain, even though I'm not in any way an expert on blockchain. But I know that it has a lot of potential in terms of overcoming some of the ID issues and the property right issues that are particular for women. As far as I know, we're not quite there yet, particularly on the bank side. But it's something that certainly we should all keep in mind because it has the potential to really turn the industry and turn a lot of these challenges, into its sorry, my Spanish is coming out. Turn it over, or let's say make it better. And there is, there's a lot of momentum on fintech, of course, and alternative finance. But I think, that we're not there yet, and there's still a lot of work that needs to be done. On the informality question, we work with Banco Estado in Chile, and they were mentioning to me they have a women entrepreneur program. 60% of their women were informal before they became a client of a bank. So there is a huge potential there in bringing women and banking them and helping them formalize, but there's a lot of support that they'll need because it's a big decision. And I think it's not just, it's not an easy decision because informality, even in this country, it happens everywhere. And it has there's advantages and disadvantages, but of course, we want to bring them into the system. And so there's a lot of support that they'll need.
I was going to address that question just to quickly follow up on it. I don't think the impact evaluations of business formalization trainings show that they don't really work. So I think it really is important that they're linked to, as I mentioned in this Malawi example, linked to a banking intervention, setting up a bank account, that they're linked to an initiative like a certification of the type that Elizabeth has described. These other things I think are really important. But there's also, we have to think about the other end of it, of the support for that women do need. But so don't focus on the formalization, focus on some of these other things that are necessary for businesses. To motivate them. I just have to say that, on the family planning and reproductive health issues, obviously that's really fundamental, and we just need in organizations that do multi-sectoral work to keep our focus on those issues as much as we focus on the economic side. I don't think it's an either or. But we can't do everything we can talk about multidimensional programs, for instance, for entrepreneurship, but I don't think it makes sense to add a family planning dimension in an entrepreneurship training program. Maybe it does at the micro level. There's other things that you could do. But I think that doing an entrepreneurship program, if you're in a World Bank, doesn't mean that you stop doing stuff on women's reproductive health.
And just on the sort of work-family balance, the child care, there is a fair amount of evidence that I recall from when I was at the IDB, and we were doing studies which compare attitudes of male and female entrepreneurs. If you asked a male entrepreneur, is work-family balance or home responsibilities a key issue for you? The answer is no. And if you ask a woman, is your managing your different responsibilities for the household and for childcare a key issue for you? The answer was most assuredly yes. So, and that's also an issue that's rich country, poor country. Yeah. So, I really think, and there are solutions to those problems. We see countries which have solved those problems. So that's another thing we got to keep on the agenda. Because the ability of women to really give the attention they want to starting and growing their businesses is very much dependent on that.
Yeah, just on that note, I think it's, we're starting, our IFC team, working with our Women Business and the Law team, will be actually releasing at the annual meetings a Tackling Childcare report. Childcare is one of the kinds of, you should see this as in the same way of the public good of education and health, childcare is a public good. And there's a role for the public and the private sector. We're going to be releasing a study of how employers can get more engaged in supporting childcare. We've surveyed companies in 10 different markets and looking at different models. So that's an event at the bank annual meetings, and the report will be released shortly thereafter.
All right, well, I really want to thank everyone for coming. Let's please join me in thanking this fabulous group of panelists. We have covered an enormous amount of territory, but that's entirely appropriate given both the importance and the range of challenges in supporting women's entrepreneurship. So, to be continued.
Thank you, Nancy.
Thank you.
Nancy.